The Biden administration telling Congress to put stablecoins under federal supervision or else they will. A President's Working Group for Financial Markets report urging lawmakers to subject stablecoin issuers to the same strict federal oversight as banks and require custodial wallet providers to be regulated by a federal agency. Joining us now is Ohio U.S. Representative Warren Davidson. Welcome, Congressman. So what do you make of this stablecoin report? Do you agree that stablecoin issuers should be banks and that wallet providers should be regulated by federal regulators?
No, I mean, we do need regulatory clarity for stablecoins. And, frankly, some stablecoins really take a lot of characteristics of securities, and so they would be regulated differently. But a lot of stablecoins are very clearly not securities. The intention is for them to be really property. And banks could be able to issue stablecoins, but I don't see why anyone would need to have a bank charter to operate that. And frankly, if you look at, we sent a letter recently asking for the SEC to clarify, because state-regulated banks can offer the same sort of features that would be securities in other cases, but they're exempt because they are a regulated entity. So the current law refers to a regulated entity, not narrowly a bank. And then the wallets is a whole different issue.
So my understanding of the new report that came out is it's kind of taking the SEC out of the equation, right? It's basically turning this over to Congress. Is that a correct assessment?
I think they're calling on Congress to take action, which to me is a great opportunity. I mean, we've had a bipartisan bill since 2018 that basically says, hey, we should be able to apply a bright line test to to any digital asset and be able to just say whether it's truly a security or not. And that's one step. And then we should be able to provide clarity for, well, okay, how would this asset, which is now tokenized, be treated for tax purposes and for custody purposes? And the custody piece touches on it. It seems like Treasury in this position that's been released from the President's Working Group says, well, we're okay with wallets existing. We just want to treat them as a regulated entity as well so that we can get all the data off of them. The concern is that you don't really have DeFi. You don't truly have decentralized, finance if you can't have self-custody. So if you can custody your own tokens, that's akin to cash. If essentially you have to have custody with a third party and the third party reporting requirements to the federal government, that's not the same as cash. And that's really one of the battlefronts in this debate.
So that seems like a real risk there. There have been some DeFi projects warning that, if stablecoins are overregulated or misregulated, this could lead to projects actually leaving the United States. Where do you see those risks? I mean, you sort of mentioned the custody issue. Where are some areas where stablecoin regulation could kind of go wrong and actually push some of this innovation out of the United States?
Well, inaction is really putting people at risk as well. So, I'm glad to see some action. So, I've spoken about Tether, for example, and they've disclosed that they're not as stable as they initially advertised. There's a question, how solid is the commercial paper behind it? If they were treated as a money market fund, for example, you would know precisely what they hold and, what is the risk behind the underlying assets to say, gee, is this really a net asset value style fund? Is it one-to-one? But if you go to something else that's backed, by a different commodity or even cash, and it's like, no, literally there is $1 of cash in a vault somewhere for each token. Well, that's kind of the original premise behind stablecoins. When you start backing it behind things that are supposed to be liquid, like commercial paper, we saw in March, April last year, they're not always that liquid. And as Evergrande highlights, Chinese commercial paper, which Tether has disclosed they hold, might not be high quality.
No, Tether has disclosed they do not hold Evergrande. They have not.
No, they didn't say they held Evergrande. They did say they hold Chinese commercial paper.
Right.
So even that they've been a little bit sketchy about that. Yeah.
No, I'm not saying they hold Evergrande. So to be clear, I'm not saying they hold Evergrande. What they did disclose that they hold Chinese commercial paper. We just don't know what it is.
Well,
I'm curious about your comment. You said that you see stablecoins more as property versus security, but I mean, many folks use it as money, an exchange of a unit of account, a medium of exchange, and a store of value, but you don't see it that way?
Yeah, I mean, a stablecoin truly is designed to be essentially cash. It's just a different way to move cash. So, the question is, can you move cash without something being a bank? And of course you can. You look at all sorts of things in America that are money service businesses. There are laws that already apply to that, and we should be clear on which of those laws apply to stablecoins. In my view, a stablecoin shouldn't have to be issued and held by a bank any more than Western Union couldn't move, a store of value from something else. They're not a bank. And there are lots of fintechs that aren't banks and don't aspire to be banks that would be affected by how this goes forward. But the idea that they're moving towards some clarity, to me, is progress. Is just, it could be a setback if they don't get it right.
So, Representative Davidson, actually, to clear up, they didn't specifically say their Tether's holdings were in China. That actually is one of the problems, is they won't disclose what country it's held. For all we know, it could be North Korean commercial paper. I mean, we don't know exactly what they're holding. How would you enforce it, though, from Congress? And have you reached across the aisle? Have you tried to do a bipartisan committee to sort of say, look, let's put together something, and here are the standards for how a stablecoin should be regulated if it has pure cash versus if it has assets? So first of all, how do you regulate that? Second of all, have you tried to work with Democrats on this?
Yeah, so the Token Taxonomy Act has been bipartisan the whole time. That mostly deals with securities, custody, and taxes. The stablecoin legislation that we're drafting is meant to be the same path, bipartisan, hopefully bicameral, and provide the definition there. But it is nice that the Treasury has given us an opening, and we're looking for clarification on Reeves. This kind of pushes the SEC out of it potentially, which can be fine because it should be clear that stablecoins aren't intended to be marketable securities. Normally, they're meant to be backed by something that is akin to that. But even if you said this stablecoin is backed in part by commercial paper, that would make it essentially a money market fund. But if you said, oh, it's a security, you would really harm consumers if you said, well, now you don't have access to it unless you go through a broker dealer. That would really harm consumers. So there does need to be clarity here, and the best place for that clarity is to come through Congress. And right now, that path should be bipartisan.
Would you effectively ban any stablecoin that won't fall under this kind of regulation? Would you disallow American citizens to trade, let's say, I don't know, let's say someone invents a stablecoin called Schmether and they back it with Chinese commercial paper entirely, and they refuse to be regulated. What kind of enforcement do you have for an overseas company to stop it from doing what it's doing, and what sort of ability do you have to stop Americans from trading it ultimately?
Yeah, I mean, ultimately, my view is that as long as the disclosure is clear, U.S. citizens should be able to invest in whatever they like with their own money. If you're managing someone else's money, well, you have a fiduciary responsibility, so you'd have some liabilities. And that's where most people have, they're not doing this on their own. They're going through a third party. And when you go through a third party, those are the regulated entities in the United States. If you do it as an individual and you take a risk, well, obviously you don't have the protections of our laws. So one of the benefits of America's legal framework, we don't have anarchy in America. We have a regulated market, and it's attracted more capital than anywhere else in the world because it doesn't have overly burdensome regulation in many areas. It is too burdensome in some, and we can improve our capital markets by, for example, changing the accredited investor rule. Right now, if you're not an accredited investor, many of these products, if they were deemed securities, you'd be violating accredited investor rules.
Mm-hmm. Is there motivation in Congress to work together and tackle this new innovation, this new technology, or are things too polarizing? Do you think that there is a way forward?
I mean, I believe there's a way forward. Like I said, we've worked on it, a group of us for 3 years now, maybe 4, to try to get to the point we are today. It just hasn't been the biggest priority for Congress. I mean, virtually no congressional district is this going to be the most important issue in the congressional district. But if you look at our financial markets and truly global financial markets, fintech is the dominant area for innovation right now, and crypto is the dominant asset class in fintech. And so, in a bipartisan way, the House Financial Services Committee created a fintech task force. I'm the ranking member, the lead Republican, and Steve Lynch from Massachusetts is the chairman of that fintech task force. So Congress is trying to address it. It's been very slow moving. And frankly, this is a bit of a prompt for Congress to say, hey, y'all better get your act together, and we should.